Good day, everybody. Still here. Daily market pulse for Thursday, November 21st, 2013. So, nice rally today. Nice bounce. We had 2 or 3 days to the downside for the markets. It looked like maybe this would be a good place to bounce from based on moving averages, based on just various other things as well. And sure enough, they did. And they did so in mixed volume today. So, confirmed uptrend still continues. The distribution days still continue. Everything closed above the moving average again. It looks like the bulls are back, at least for the time being, at least until the next target. We'll talk about that in the chart. So let's go take a look. And you can see the couple of spinning tops, the doji essentially at the top here near the channel. And then we had the drop into the 8 moving average. Then we had a nice bounce here in the Dow Jones back to those essential highs, back to 16,000, closing above 16,000 for the first time. So that's a good sign. Question is, can they push through this 16,100 area and just change the angle of the current trend? That's the big deal here. So I'm going to move that a little bit like that off the highs of the red candles. There we go. So that's holding support. You have the 8 moving average support. You have that little trend line of support right now as well. That's all good and dandy for now, but we'll see what they do at the tops here going into Friday, of course, as well. A couple of big earnings after hours. Fresh Market and I think it was Ross Stores. I guess they got beat up pretty bad, so who knows how it'll affect the markets tomorrow. We will have to find out. Okay, so let's look at the S&P. S&P, you recall, was in a flat trend, broke out, dark cloud cover, came back, supported the 8, supported the change of polarity area, 1775, bounced beautifully with a bull sash today, where it opened higher than yesterday's close, closed with a new high as well. Nice. Dark cloud cover high from a few days ago will be the target, at least initially at 1800, and then looking for a target higher than that at 1820 plus if they can even muster it up. Came out of the stochastic, came out of the overbought area and just dipped down, so now it's reset essentially. It may not necessarily come all the way back down to 0 or 20, but it looks like if that, it may be enough for it to start rising once again. We'll see if that's the case. Bollinger Bands are starting to open, so there's room for growth at this point. So that could be a good thing. Nasdaq. Nasdaq had that big bearish engulfing with a confirmation the following day on Tuesday, but as mentioned, those were all low volume days. So it wasn't a big scare necessarily. We thought we could still see a drop into 3,900 or even 3,875. That did not happen. We had another bull sash, very aggressive for that matter, an open that was very much significant compared to yesterday's close. New fresh high, new fresh closing price as well. Again, the high of the bearish engulfing becomes the target. Bollinger Band's trying to open a little bit here. 4,000 becomes the target once again. See if they can't break through 4,000. That's the key. That is the real key here. Okay, so that's the NASDAQ. Looks good there. TSX. TSX looks like it's still kind of sideways, still struggling a little bit. See, the Bollinger Bands are still kind of tight, but it's just starting to open now. So there's a little bit of a press to get through 13,500. Looks like it can do that, but it still gets to clear and close above the shooting star high. To really make this a true breakout. So we'll see if that can accomplish. If we can accomplish that, then there could be a substantial move to the upside just because of the measured move. You have the flagpole, the flag-like formation, or at least this consolidation for the last month. That could be a pretty substantial move of 700 points, 500 points anyway, something like that, possibly off the 13,300 level. So that would take you into 13.8 or higher potentially. We'll see if they can accomplish that sort of thing or not. Let's take a look at the U.S. Canadian dollar. Get a recap of that. Excuse me. Come on, load. Okay, so markets rise and yet the US dollar rising. So we've talked about the level of getting it through 105, and then ideally the targets then would be 105.50 to 106, and it's accomplishing that now. It took a little bit of a stumble here for a little bit, came back to test the 20-day moving average as well as that little pivot area at 104. Bounced off that with a bullish engulfing Morningstar formation combination, and then another good strong push, very aggressive through resistance and breaking out and closing above that little resistance at 105. So it looks good so far. This is again 105.50 to 106 is the target. The red line across there, that's what you're looking for on the US Canadian dollar. Support now becomes 105 at least for now, possibly as low as 104.75. Let's look at treasuries. Treasuries had been sinking, bearish engulfing off the cluster of moving averages, including this current trend, and then flushed pretty hard yesterday. Today, decent bounce, but from where? This might be just a final flush before the reversal because there's really no support here. It's got to hold here or forget it. It's going lower. Simple as that. Target comes all the way down. Oops, let's see here. Target would be all the way down in this area right through here. 128-ish to 128 and some change, but that's what it looks like. So that's the balance. There's a little slight continuation going on there right now after hours into tomorrow's trading session. Um, but that's about it. It's got to do it. It's got to get through 131, almost 132 really, and then it's free probably to go higher. But outside of that, it's in trouble. All right, that's treasuries. Let's go look at. Well, we haven't looked at the yen in a few days, so let's take a peek. The yen is still flushing lower, getting uglier. So there was a support across here, just like we just saw the treasuries to some degree, right across here. I made that a little too deep, more like that. So it flushed through that today, and now going lower still. So this is, it's got a ways lower if it's going to do anything at all. All the trends are lower on the yen. Sorry for those guys. Gold. Gold with a dollar higher typically does not respond well, and it gapped lower yesterday after the market closed, and then it's just gone sideways ever since. So spinning top, and it's literally hanging by a thread. The support area right across here. It's just hanging on barely, if at all. It may already be flushing through. The next level, it appears, would be down in here. That would be a retag of those lows at 1200. That would be probably that blue trend line as well. It can kind of coincide. It's kind of looking that way, but the size of the real bodies here would suggest maybe that the selling is over and that we might see a reversal, but it's one of those now or never sort of situations. Plus, I mean, there is a little bit of evidence that might suggest that it's going to hold there just because that little trend like that. There's the lows, but it could just keep sliding down that as well. So it's a tough one right now. It's more, of course, a bias to the downside because the trend is down with no real support here. But it might act as a crack and snap, meaning it's broken the support as of today and looking for maybe a good solid rebound to come back through 1250 and then back through 1260 and then more to truly be a bullish move to the upside and immediate buy practically. So, okay, that's that. Let's look at oil because oil had a monster beautiful day today. So we talked about the support across the bottom, that 93 area, bounce, bull sash, bounce with a spinning top, doji, come back down again, spinning top, doji. And so as quiet as that got, we knew that something was brewing, that something was going to happen. It was either going to be an ugly flush to the downside or a really good strong push to the upside. And we got the push to the upside. So there's the bullish engulfing, great move through the 8 moving average. It closed above the 20-day moving average for the first time in quite some time, a couple months, 3 months, something like that. So I think it was back in maybe September or August. I can't remember now. But so now it's back looking toward 96 again. It's at 95, 95 and a quarter now, looking for 96. Tries to break the 96 mark. If we can do that, it's heading toward 98, 99. So that's a pretty nice reversal right there. And I'd say more likely a continuation is due than anything else. Obviously, the moving averages are still pointing down for the most part, except for the 8. Once the 8, if the 8 can ever cross over the 20, at that point, then and only then will it actually sort of strengthen the short-term trend to the upside. But until then, price action right here looks pretty darn good for the bulls, at least short-term, into at least some kind of retracement to the upside. So good for oil. Good job there. Natural gas we haven't looked at in a while as well, so maybe let's take a peek there as well. Let's sneak a gander here. Okay, so inventories were today. You can see the downtrend, then kind of chop, chop, chop back to try to get back through the 375 and so on. It's doing a reasonable job. It's got some support across here at 345. It held. It's got a lot of resistance though from 375 into 390. So this is where the rubber hits the road, as they say. We'll see what they can accomplish here. It's either a burst higher or it's an absolute collapse and reversal and just rejection. I suppose we could look at copper, Dr. Kappa. Let's take a sneak a peek here too. Okay, well that's been, you see that red line I got at the top, that has been kind of the downtrend. So there's support across horizontally with a downtrend in the highs, downward pressure including the 200-day moving average. It did flush as you can see. I remember somebody saying, "Hey, it had a bad day." I said, "Well, a bad day doesn't mean a whole lot. Let's see what it does. Because you can come back and bounce right back into a crack and snap, and that's kind of what it's trying to do. It went sideways across 315, and now look at the huge candle today. So you're looking for a possible break above 320. If it does that, then you got a move into 330 on copper. Otherwise, you're looking for a support back at 315 or slightly lower, maybe 312, and then a drop into 306, 305. So keep an eye on that. Small caps always becomes interesting. Imagine that it's higher just because of everything else going on. It's got to be higher. So it's right back to the 111, we'll call it 30 to 50 area. Across that gold line. So it's been there with a multiple doji bearish engulfing and came back again. Harami spinning top bearish engulfing. Boom. Dropped again, but here it comes again. The bulls keep stepping in. The trends are still up, right? I mean, essentially you got the rising 50. That longer intermediate trend is still there and it's still present, so it tends to hold things up. But it becomes critical. It's got to get through into 112 and through that to really truly be bullish. The Bollinger Bands would have to open as well, which they're trying to do right now. So we'll see what it does, but it's stuck here, and it's not long until you get through that 111.80, 85, all the way to maybe 112 area. Otherwise, you're getting a rejection here and a drop below 111, which will probably take you back toward 109 and maybe even 107 to 108. All right, transports have done well. In addition to that, came back down, tested the 8, tested the change of polarity across 127 and a quarter. Bull sash here as well, very aggressive. Open actually occurred beyond yesterday's open, so that's very strong. So chances are this is going right back to the highs of the bearish engulfing near 130, and then possibly higher again. It maintained above the 8. Certainly maintained above the 20-day moving average as well. Only one day closed below the 8 moving average. That's pretty strong. So this looks good for the upside, it appears, until proven otherwise. Retail, RTH, same thing. Change of polarity across $60. That nice round number. 4 straight down days. A little bit of rejection the last couple of days. You see those lower shadows, including yesterday's real body. Kind of small. Decent bounce today. Not so bad. New high, higher close. Looks like it's going to go back to retest 61 to 61 and in a quarter probably. Somewhere in there. Semiconductors have been struggling a lot, like the Nasdaq has been struggling. But it's still going sideways across 40.25 on the bottom side, and the upside still has trouble, around that 41 and a quarter, say, into 41.50. So it's got a trap there as well. So it's got no direction other than sideways. And lastly, it's probably best to look at the VIX. The VIX we thought might take a good hop, maybe an open into 1450, and then reverse with the markets flushing before bouncing, but they didn't. What we saw was an immediate drop. No a gap lower like we saw the markets gap higher. No upper shadow at all, and it's an evening star formation, which really probably doesn't go too far deep. It's going to go into maybe 11 and a quarter. It doesn't usually go lower than 11 and a quarter, but that's just based on observation and history. So who knows what it does? But right now, 1250 to 12 is usually a support area as deep as maybe 11 and a quarter to 1150. We'll see what it does in the markets, how much the markets can go higher as well. Okay, that's good. Concludes the Daily Market Pulse for this Thursday, November 21st, 2013.